The markets are closed, but the business stories are just heating up. Hello, I'm Gerg Cahiles. Catch up with us on Business Brief. Asian shares opened in the positive territory on Tuesday. This as investors took relief in signs that U.S. President Donald Trump's tariffs may have a milder impact than feared. Japan's Nikkei 225 gained 0.38%, while Australia's ASX 200 rose 0.85%. South Korea's Kospi added 0.47%, and Hong Kong's Hang Seng edged up 0.12%. Indonesia's Jakarta Composite Index, or JKSE, also advanced 0.35%. However, India's Nifty 50 dipped slightly by 0.03%. In the currency markets, the US dollar strengthened against several Asian currencies. The dollar rose 0.32% against the Japanese yen and edged up 0.01% against the Hong Kong dollar. It also gained 0.05% versus the Singapore dollar and climbed 0.13% against the South Korean won. Meanwhile, the dollar appreciated 0.10% against the Thai baht. However, the Australian dollar weakened against the greenback, with the AUD-USD pair falling 0.26%. Commodity and cryptocurrency prices were mixed. Gold slipped 0.81%. Oil prices also declined, with West Texas Intermediate crude down 1.08%, Brent crude falling 1.11%, and Dubai crude easing 0.29%. In the crypto market, Bitcoin edged down 0.45%, while Ethereum bucked the trend, rising 0.51%. The Marcos administration is looking to strike a favorable deal with the United States amid tariff pressures. Trade Secretary Cristina Roque and Special Assistant to the President for Investment and Economic Affairs Frederick Go are headed to Washington today to negotiate for lower tariffs under U.S. President Donald Trump's new 17% reciprocal duty on Philippine exports. The Philippines warns the measure could put economic growth, jobs, and wages at risk. Trade Secretary Roque says the delegation's goal is to bring down the U.S. tariff rate on Philippine goods, preferably back to zero. In exchange, the Philippines is offering expanded market access for key U.S. exports, including automobiles, dairy products, frozen meat, and soybeans. Still on tariffs, President Donald Trump moves to protect U.S. car makers. Tariffs on foreign parts will be reduced to automakers, so automakers can avoid double tariffs and receive reimbursements for past levies. The White House calls it a major victory for American workers and investment. Automakers warn that steep tariffs could still disrupt supply chains and raise prices. Trump had previously announced the imposition of 25% duties on auto parts no later than May 3. Business operations in Spain and Portugal face major disruptions after a massive power outage brought parts of both countries to a standstill on Monday. The blackout grounded flights, halted public transport, and forced some hospitals to temporary suspension. Spain's Prime Minister Pedro Sanchez said electricity supply was restored to about half of the country by the grid operator. Business, airports, and manufacturing plants were among the worst affected. Spain's Interior Ministry declared a national emergency, while emergency cabinet meetings were held in both Spain and Portugal as authorities investigate the cause of the widespread outage. Infrastructure resilience, a key priority for business and economic stability in Europe, is once again under the spotlight. The Liberal Party of Canadian Prime Minister Mark Carney retains power in the country's election, but they fell short of winning at least 172 seats required for a majority government. Still, the result marks a notable comeback for the Liberals, who had been lagging in the polls before Justin Trudeau quit as Prime Minister in January.
Very excited. I'm just I feel like there was a lot on the line, a lot at stake for this election, and I'm really glad it happened so quickly as well. We thought it was going to be a lot closer, but it's really looking good for the Liberals.
We have to pause for a few reminders. The biggest stories from around the country are up next. Keep it here on the Business Brief, only on the Bilyonaryo News Channel. We're back on Business Brief. Colliers warned of surging vacancy rates as property sectors struggle to regain pre-pandemic strength. The details from our correspondent in Taguig City, Sujin Kim. Sujin, go ahead.
Yes, Gerg, the Philippine property market continues to grapple with fierce headwinds in 2025 as collapse in demand, shifting business landscapes, and lingering construction delays hammer the office, residential, and retail sectors. According to the latest briefing from real estate services firm Colliers, the office market is bracing for turbulence with vacancy rates swelling to 19.7% in the first quarter. Net office take-up reached only 77,000 square meters so far this year, a sluggish start that is pushing forecasts for the full year down to just 150,000 square meters. Vacancy is expected to worsen, potentially peaking at 22% by year-end, signaling weak corporate expansion and cautious tenant movements amid global economic uncertainties. In the residential sector, ready for occupancy promotions are temporarily lifting demand both within Metro Manila and in emerging housing areas outside the capital. Secondary market vacancy is projected to skyrocket past 26% by end 2025, with the Bay Area in particular expected to suffer a sharper surge in idle inventory. Meanwhile, the ongoing rezoning of Makati is poised to redefine the country's premier central business district. Meanwhile, mall vacancy has improved, sliding to 13% from 15% just 2 quarters ago. Developers are actually pouring billions into refurbishments to revitalize shopping spaces both inside and outside the metro. Foreign brands, particularly in food and beverage, are doubling down on their Philippine expansion plans, confident in the country's robust consumer base. Colliers projects that Metro Manila mall vacancy could finally return to pre-pandemic levels by end 2026, barring major macroeconomic shocks. And those are the latest updates from Taguig City. Back to you, Gerg.
Thank you for that report, Sujin Kim. The International Monetary Fund, or IMF, says the Philippines has room to strengthen its tax system by making collections more efficient. An IMF spokesperson pointed to the need for reforms in excise taxes, enhancing value-added tax collections, and improving overall tax administration. The IMF also stressed that tax incentives should be better targeted and tightly managed. Finance Secretary Ralph Recto earlier said he is not pushing for new taxes. Instead, his focus is on boosting collection efficiency and expanding non-tax revenues. The Agriculture Department waits for the rollout of cheap rice to be sold to specific sectors as government aims to subsidize costs to make the staple more affordable. Paulo Barcelon joins us on the line for more on this story. So Paulo, where will the funding for the subsidy come from?
Gerg, this will come from both the DA through the Food Terminal Incorporated and participating local governments. In a press briefing earlier this morning, Agriculture Chief Francisco Tiu Laurel said that around 5 billion pesos will be allotted for the program, with 4.5 billion going to purchasing rice stocks and the remaining $500 million for logistics. Laurel is now asking the COMELEC to grant its request to exempt the program from its election aid ban, as the program is essentially not a form of free aid.
Susunod kasi tayo sa COMELEC at umpisahan na lang ang bentahan matapos ang halalan. But of course, we're requesting the COMELEC to grant this para ma-start na ho at may makinabang ng mga consumers.
Now, Gerg, aside from the Visayas, select areas in Luzon and Mindanao will also be allowed to sell the cheap rice. For now, only solo parents, 4-piece beneficiaries, senior citizens, and PWDs will be allowed to purchase the cheap rice. And this will be a pilot test for a wider rollout of the program by 2026. Gerg?
Well, thank you for that report, Paulo Barcelon. Government infrastructure spending continues to gain momentum, rising to 182.9 billion pesos in the first 2 months of the year, supporting economic growth ahead of the midterm elections. Latest data from the Department of Budget and Management, or DBM, shows spending was nearly 20% higher compared to the 153.4 billion pesos recorded in the same period last year. Year on year, infrastructure and capital outlays also expanded by over 23% to 148.3 billion pesos from 120.5 billion pesos as the government steps up public works and investments in critical projects. The increase was driven by the Department of Public Works and Highways, fueled by the completion of carryover projects, payments for emergency and disaster-related civil works, and the settlement of right-of-way claims. Strong infrastructure spending remains a key pillar for boosting domestic demand and driving job creation ahead of the country's 2025 midterm polls. The Philippine Deposit Insurance Corporation is selling 76 corporate and closed bank properties through electronic public bidding. These include agricultural and residential lots ranging from 90 to 50,000 square meters. The properties are located in Aklan, Albay, Bataan, Batangas, Bohol, and other parts of the country. Prospective parties can join the e-bidding through a one-time registration on the portal at assetsforsale.pdic.gov.ph. Interested buyers are encouraged to visit the catalog of properties in the e-bidding portal. The government is ready to use the nuclear energy. In an interview with Bilyonaryo News Channel's Business 360, Ronia Perocho, Meralco's Executive Vice President and Chief Operating Officer, cites the passage of the Philippine National Nuclear Energy Safety Bill in the House of Representatives as his reason. He adds the bill is awaiting for Senate approval.
But while waiting for the passage of this bill, Meralco is already doing a lot of initiatives to really promote the adoption of nuclear energy in the Philippines. In fact, during the Giga Summit last week, we already launched our NEST program. NEST stands for Nuclear Energy Strategic Transition, which basically aims to support the government to develop 1,200 megawatts of nuclear power by 2030. Not 2030, but 2032.
The Philippines is now expected to reach upper middle income status by 2027, 1 year later than the government's original target. That's according to the World Bank. World Bank lead economist Gonzalo Varela says the country could still achieve upper middle income status by 2026, but only if it delivers outstanding growth performance. To sustain that status, he stressed that the Philippines need to push through key reforms and address long-standing challenges holding back higher income gains. At the same time, the World Bank slashed its growth forecasts for the Philippines, now expecting GDP to expand by 5.3% this year and 5.4% next year, well below the government's 6 to 8% target. Achieving upper middle income status is a critical milestone for the Philippines, signifying stronger economic capacity, better global access, and a pathway towards higher standards of living for millions of Filipinos. San Miguel Corporation, or SMC, opens another urgent care center in Manila, offering free medical consultation and services as part of its push to expand healthcare access. The second Bagong Urgent Care and Ambulatory Services, or BUCAS, facility is located at SMC's Better World Smoky Mountains site, developed in partnership with the Department of Health and Tondo Medical Center. This follows the opening of its first BUCAS Center in Cubao, Quezon City. In a statement, SMC Chairman and CEO Ramon Ang says the initiative aims to strengthen communities and help patients recover faster. SMC is also looking to convert some of its community clinics in the provinces into BUCAS facilities, provided partnerships with local hospitals are in place. The Department of Tourism and Emirates Airlines team up to promote the Philippines as a premier destination for Middle Eastern and European travelers. Tourism Secretary Cristina Garcia Frasco signed a memorandum of understanding with Emirates to develop new promotional strategies targeting the Middle East, Mediterranean, and European markets. The MOU also aims to expand flight routes and increase seat capacity to key Philippine destinations, making travel easier for both tourists and Filipinos based in the Middle East and Europe. To maximize reach, both sides will also promote each other's campaign across various media platforms. British celebrity chef Gordon Ramsay expands his food empire in the Philippines with 2 new restaurants set to open soon. Gordon Ramsay Fish and Chips and Street Burger by Gordon Ramsay will soon rise at Megaworld's Mactan Newtown development in Lapu-Lapu City, Cebu. Signature dishes to watch for include gourmet burgers, lobster and shrimp dishes, and milkshakes. The Michelin-starred chef first entered the Philippine market with Gordon Ramsay Bar and Grill at Newport World Resorts in Pasay City. During his visit to the country last January, Ramsay confirmed plans to open more restaurants, including the world-famous Hell's Kitchen brand. The expansion underscores strong growth opportunities in the Philippines, hospitality, and dining sector. Philippine shares rebounded in the second trading day of the week after a slight dip yesterday. The PSE index ended higher by almost 0.1% to close at 62.52, finishing the day as the 6th best performer in Asia. The sectoral indices ended mixed, with services falling the most at more than 1%, while industrial have the biggest gain at nearly 2%. Advancers outpaced decliners 92 to 77. The total value turnover reached 4.88 billion pesos. The day's most active stock ended mixed, with Universal Robina Corporation rising the most at more than 5%, while Bloomberry Resorts fall the most with nearly 4%. Meanwhile, at the foreign exchange market, the peso is currently trading at 56.28, stronger from previous close of 56.42. And that's a wrap for today's Business Brief. I'm Gerg Cahiles. Join us again tomorrow as we bring you the stories that help you plan your next big, bold moves in business. Only here on the Bilyonaryo News channel. See you then.